Chapter 9 lecture video. In Chapter 9, we focus on how to account for what we call long-lived assets. We'll look at both tangible and intangible long-lived assets. When you think about your plant assets, think about the property, plant, and equipment section of the classified balance sheet. These are long-term assets being used for a time period longer than 1 year to earn revenue for the business organization. These assets have a physical substance. They are used in operations. They are not intended for sale to the customers. And again, they're expected to provide services to the company to help earn revenue for a number of years. The exception would be the land account. These plant assets are also referred to as property, plant, equipment assets. Sometimes they refer to as being fixed assets. We look at different companies and we know that plant assets can be critical to a company's success. So a company like Wendy's, the plant assets are 73% of their total assets, but a company like Microsoft that focus more on services and technology, only 3% of their plant assets represent their total assets. Historical cost principle says record the assets at their cost, meaning the amount that we pay for the plant assets. You should also consist or include any expenditures necessary to acquire an asset and make it ready for its intended use. What does that mean? It means that any cost to get an asset to us, shipping costs, freight costs, will be included in the plant asset accounts. Any cost to, say, assemble equipment will be included in the plant asset cost. The key is any cost to get the asset ready to be used will be included in the plant asset cost. Now, there are two types of expenditures after we have acquired these plant assets. What's called revenue expenditure and capital expenditure. If it is a revenue expenditure, think about your ordinary routine type of maintenance. So for a vehicle, an oil change, getting the tires rotated, things of that nature will be classified as a revenue expenditure. For these type of expenditures, the cost is going to be expensed immediately. So you would debit some type of expense account and just credit your cash account. But if it is what we call a capital expenditure, it would do one or two things. It's going to either extend the useful life of the asset or increase the capacity of the asset. So for example, if I put a new engine inside an automobile, that's going to extend the useful life of that asset. Or if I was to add on to a building, add a new wing to the building, that's also going to increase the usefulness of that asset. So if I was in class, of course, I would do some drawings, but I'm going to skip the drawings for today. So when we talk about what is the actual cost of the plant asset, it is the actual amount of cash paid in a cash transaction or the cash equivalent price of the asset. So pretty much we look at the fair value of the asset given up, which is going to be typically cash, or fair value of the asset received, whichever is more clearly determinable. And we'll go through some examples of how to determine the actual cost of a plant asset. Here we go. So land is an example of a plant asset. And we're saying what cost should be included in the land account. As the rule states, Any cost incurred in making the land ready for its intended use should be included in the land account. That cost may include the purchase price of the land, any closing costs required to any closing costs paid in order to acquire the land, any fee paid to the real estate brokers, if there are any accrued property taxes, meaning taxes that were owed on the land, those taxes have to be paid in order to acquire the property. Any liens on the land, meaning that if the previous landowner owed any debts tied to the land, such as to the sewer district, the water company, those liens have to be paid in order to acquire the land. Illustration. Assume that Hayes Manufacturing Company acquires real estate at a cash cost of $100,000. The property contains an old warehouse that is raised, tore down, at a net cost of $6,000. It costs $7,500 to tear the old warehouse down, but they received $1,500 from proceeds from the sales materials. They tore the old warehouse down, assuming it could have been in the form of bricks. When they sold the material, they received $1,500. Additional expenditures are the attorney fees and commission paid to the real estate agent amount of $8,000. So we're saying what costs should be included in the actual land account. The rule again says any cost to acquire the land and get the land ready for its intended use should be included in the land account. So we're going to include the cash price, the net removal cost of the warehouse, the attorney fees, and the commission. Therefore, the land will be recorded in the land general ledger at a total cost of $115,000. Okay? Land improvements are different from land. Land improvements are expenditures necessary to make the improvements ready for the intended use. So I think about a land improvement, think about items such as a driveway, parking lot, fences, underground sprinklers. These are examples of land improvements. Now, land itself does not depreciate because land does not have a defined useful life. However, land improvements, they do depreciate because they have a limited useful life. At some point, that driveway, that parking lot, the sprinkler system will have to be replaced. Therefore, these type of land improvements, they have a limited useful life and they go through the process known as depreciation. Buildings. We're saying what costs should be included in our buildings. Once again, include all costs direct to the purchase of the building or the construction of the building. So if I'm going to purchase the building, the purchase price, any closing costs, real estate broker's commission will be included, along with any remodeling and replacing or repairing the roof, floors, wiring, plumbing, HVAC. So again, any costs we're going to incur in order to get this building ready for its intended use should be included in the cost of the building. If we're going to have a building constructed, it will include the actual contract price for the building, plus any architectural fees, building permit, excavation costs, whatever costs we're going to acquire to construct that building will be included in the building account. Equipment, again, the same rule, all costs incurred in order to acquire the equipment and get it ready to be used. Those costs will include the purchase price, sales tax, any freight charge, insurance during transit, assembling costs, installing, testing. The key is any cost to get the equipment ready to be used will be included in the equipment account. So all of these costs will be capitalized, meaning they're going to be included in the actual equipment asset account. So now we have a delivery truck with a cash price of $22,000. We paid sales tax of $1,320, paint and lettering $500, the vehicle license $80, and a 3-year insurance policy for $1,600. So we're asking what cost should be included in the asset account. Well, of course, the cash price, the sales tax, the painting and lettering are all going to be included in the actual cost of the delivery truck. So these costs again are required to get the truck ready for its intended use. Maybe you're saying, what about the license and the insurance policy? Well, the insurance policy, because it's for 3 years, would be recorded as prepaid insurance, and the vehicle license, which you're going to acquire after you purchase the vehicle, that will be recorded as an expense. So we're going to debit the equipment account for the $23,820, recognize license expense for $80, recognize prepaid insurance for $1,600, credit cash $25,500. Okay, so we talked about revenue expenditures and what we call capital expenditure. If it is an ordinary repair, that's what we call a revenue expenditure. Just debit an expense account such as maintenance and repairs. But if it's a capital expenditure, meaning it will increase the efficiency of the asset, increase its productivity, or extend the useful life of a plant asset, then that expenditure will be debited to the actual plant asset account that's going to be affected. I'm going to come back with a second video and talk about this concept known as depreciation. Stay tuned.